All right, so on IS 23, this is all about the borrowing cost. So why do we borrow as a company? In any company, what are the objectives of borrowing?
For the financial activity,
Yeah, for the
business activity.
financial and business activity. Uh, so we also borrow for two types of objectives. One is the general objective. So if the financial director do not know what would be exact project for which they need to finance by borrowing, they can just borrow from bank for the normal cash flow of the organization. There is a second approach whereby the company knows that they need to borrow for a specific project. Maybe they need to develop a software or develop an infrastructure. So the borrowing could be for a specific project. We have learned earlier, and so try to relate this again to IS 16. So it's not for the property, plant, and equipment, indeed, but the concept wise, try to relate this with IS 16 and 40 both. When do we capitalize the cost? And when it comes to capitalization, we have also discussed that there could be legal cost or license, etc., right? So similarly, there could be banking charge as well. There could be a cost of buying money, right? So we know interest is the price of money, right? If we have agreed that any particular project is incurring a cost which is specific for that project or making that asset improved, then we need to capitalize any such expenses or cost. In that, using the same notion, if you borrow money from bank and banking is charging the interest, there should be no debate that it should be also capitalized. So that is the background of the borrowing cost. When any money is borrowed and interest is charged, we capitalize those borrowing cost. That cost can also include the finance charges or the loan processing charges, etc. Right? Whenever you apply for the loan, there could be some admin or the finance charges just to process the loan application, etc. So all those costs is the borrowing cost, which needs to be attributed to the construction of the asset or the project. Okay, so the scope of this standard is that it relates to all the capitalization except for the equity or preferred capital. So preference capital or preference shares, those are out of the ambit. Biological assets, these are typically always separately dealt with, IS 41, and inventories, which is work in progress, they are dealt with IS 2. So we don't apply this to inventory accounting. Apart from these standards, IS 23 is applicable for borrowing. So key terminologies, defined terms, borrowing cost is interest and other costs incurred by entity. We have discussed already. Examples. So interest expense calculated using the effective interest rate as per the IS 39. So what is effective interest rate?
Nidhish, effective interest rate is like the average of my year. Like if it's 2 months, 3 months, and 4 months having a different interest rate. So I just take the average and what is the actual. I can say like how much the interest I get it on my principals. That comes give my effective interest rate.
Yeah, something similar to YTM, the yield to maturity or something.
Yeah.
If
Yeah.
you apply one single capitalization cost throughout the year for different period, that should be effective interest rate. So because there should, when we are talking about the borrowing cost, the interest rate itself should be reasonable one. The second example is finance charges for the lease.
So, Nidhish, the effective interest rate, whether we can say like that repo rate, like whenever we are taking the loan from the
Mhm.
bank, so loan having upon some methodology for the fixing the rate of interest. So the rate of interest that they are calculating based on the repo rate plus margin cost, right? Margin interest rate.
Mhm.
Let's suppose the repo rate is 4% and 3% they have adding the margin, so
Right.
they can give the effective interest rate to the customer 7%.
Mhm.
So we can say like this also, like effective interest rate.
Indeed. Let me give you a rule of thumb. There could be dozens of different ways you will be charged the interest, but as a company you should just overlook everything. What you should look at is, if you're going to the bank, whether they are using LIBOR plus 2% or prime
Yeah.
rate plus 5%, to you, for the purpose of this calculation, that shouldn't bother. You just look at that, okay, when you call the bank and in the bank statement they are reflecting this much interest on annualized basis. That's it. That's the rate you need to take. Bank can have various methodology, repo or some LIBOR. There is IBOR now, prime plus, whatever the methodology they charge. But whatever is the cost ultimately coming on your bank statement, you just use that one. The only thing that you make sure that it is the effective one for the entire period. One simple consistent charge for the entire life of the project. The best is the annualized rate that should be taken. So the second point, finance charge in respect of finance leases recognized in accordance with IS 17. So when there is a finance lease, again, there will be a rate of interest applicable, because remember in finance lease also, when we pay the capital or the actually the right word is cash or the installment, there are two components. One is capital, another one is interest. How is that calculated? So let me take an example. Say this is 2021, 1st January. Okay. And on that day, you went into a finance lease for 20 years and you need to pay $1,000 every year. So today, basically, what is the worth of this commitment? You need to pay 20 for 20 years, $1,000 every year, right? So what is the value of this commitment today? What is your liability? Because that amount will be your liability in the balance sheet. What is the liability? So it will be like this: first year, second year, third year, fourth, so on and forth. You need to pay $1,000 each year, right? Now today, and there would be a cost of capital associated with this. That cost of capital could be, say, 10% that the lessor will charge, right? You are the lessee, so lessor will charge, say, 10%. So you need to calculate all this amount in the present value term at the rate of 10%, which comes to be something around 17,800. So this is the present value of all the amount. So when now let's make a situation when every year now when you pay 1,000 of installment, right? That's what we agreed. So what happens is, when you pay $1,000, actually what is considered that you are paying a 10% of this amount as well, right? This is your current liability in today's term in the balance sheet, 17,800. What is the interest rate of your books? So that could be, your book can have an interest rate slightly higher or lower. So that could be 11%, or let's make it 10%. So it is considered that when you pay 1,000, there is uh, a 10% of the finance charge, basically, which is applicable. Are you still with me?
This can you repeat it once? Uh,
Okay.
this 17,800, where we need to show it today, because we just need to charge the 1,000 for the first year. That is sure, and the interest. So that would be part of our capital.
You are the lessee.
Uh,
You
okay.
have taken the
Oh,
asset on the finance lease.
okay. So in that case, that would be my assets, and the liability which I need to pay, it would show in the my liability section for the 1,000,
No.
right? No.
See,
Uh,
you are paying $1,000 per year for 20 years.
yeah. Okay.
If you pay 1,000 per year for 20 years, what is the present value? You apply 10% of present value. So all the stream I'm showing. So you take the
Okay.
present value of all of this.
Okay.
So basically what happens is when you take the present value, it becomes say how much? 20,000. So it will become say 17,800.
Okay.
So this is your current liability because you are supposed to pay 1,020 years. That means the today worth you can pay in one go 17,800 and the liability will be settled. But since you are paying in the installment, you have to pay 20 times 1,000, and that will be calculated in the present value term as 17,800. Are you with me? It's just
Yeah.
like a loan.
Yeah, Nidhish.
Okay.
Clear.
So, yeah. So now this is your liability of 17.8, and then you have an asset already, which is equal amount 17.8. And you know why? Because your asset and liability both has to be equal on the first year, right? Because you have taken a finance lease. That means you have got a liability. So if liability is 17.8, your asset has to be 17.8 as well. Because on the day zero, you don't have any net liability or net assets, right?
Yeah.
Under finance lease. So that's why actually we briefly discussed earlier as well that you create the present value of the entire liability, which is your liability, and then you need to have an offsetting asset of the same amount. Okay. Now the reason to discuss all this was that when you start paying every year, there is a component of interest which is charged on 17,800 because 17,800 is your liability, and you are supposed to pay an interest every year on this amount, right?
Okay.
Any opening liability has an interest, so you need to pay interest and capital both. So whenever you start making the installment, and generally in the finance lease, your installment start like say little higher at the start, and then it can go down or it becomes an equal amount, right? So in the first year, first few years you are supposed to pay heavy interest, like your liability is massive, and then you start paying the principal. The same thing happens in your bank loan as well for the EMI. If you analyze your statement, you'll find out that first few years you pay heavy interest and your principal is not being paid first few years, very small amount. Then gradually your interest will start to go down and your principal payment starts to catch up, right? So all this, does this make sense or I've lost everyone?
Yeah.
Yeah. Clear.
So the point I'm trying to bring home is that the 10% or 12% that is implicit interest rate here, that implicit interest rate is also the cost of borrowing as per the finance lease. Because I'm trying to prove that there is an implicit interest rate even in the finance lease. That interest rate is something that you need to note down for your borrowing cost and finance lease. So finance charge in respect of finance lease recognized in accordance with IAS 17 leases or IFRS 16 if early adopted. So basically, just to explain this point, what it is talking about, we just undertook that exercise. The third point C is exchange difference arising from foreign currency borrowing to the extent that they are regarded as adjustment to the interest cost. Okay. So it is saying effectively that if you borrow in foreign currency, right, and of course there will be interest rate, but if there is an exchange rate differences because of the borrowing in the foreign currency, that exchange rate differences is also added to what? Borrowing cost. So suppose many companies do that. If a company is based in US as well as Australia and Canada, and they find out that it is, since their business is much stronger in Canada or the bank are lending loan cheaper, so they will borrow in other countries. They will bring the money home. They will invest in the project, and then they will return. In that process, what happens if the FX rate goes against you? I mean, your home currency becomes weaker, the foreign currency becomes stronger. Then what happens? You have to pay more. If you have to pay more, that FX loss or FX impact has to be allocated to the project because it is because of the project, right? So you need to allocate ascribe that cost of FX to the project as well. What?
So sorry, Nadish. So you mean to say like that we need to add it? That would be a part of my cost,
Correct.
borrowing cost.
Yeah.
Okay. Okay.
And this discussion should be very kind of a matter of concern for many organizations that if you borrow in foreign currency, currency fluctuates and the loan becomes more expensive, who bears that? You don't have to expense this out. You need to capitalize that cost. In a way, it is good news that your P&L will not be impacted, right?
Yeah.
So, Nidhish, I have one point here related to the preference dividend. So, whether we need to consider that also in this case in the borrowing cost, because the in the preference dividend means whenever we have a preference capital, we need to give the preference dividend as a classify under the debt, right?
Give me a second. Actually, yeah, yeah. Can you restate? So, in case of preference dividend, and if
Yes,
there is an FX gain loss, right?
you're right.
Mhm.
So my question is that a preference dividend also for under the borrowing cost,
But why?
because
Why would that?
whenever we have a preference dividend, definitely the preference capital is classified under the debt, right?
Okay.
So we need to give the preference dividend as the interest expense. We can treat it as the interest expense.
Oh, okay. Um, that will not go into the borrowing cost.
Yeah.
Answer. And it is because even though the preference shares are considered like a debt or mezzanine finance, it is not pure debt, it's a mezzanine finance, half equity, half debt, right?
Right.
But can you say that the preference stock or preference shares were issued to do the software developments?
No.
Because that gives a lien on the entire company. So of course, one thing that you can say is that the end overall cost of borrowing to the company will be part of such projects. Like if you issue debenture or the bond, and you have to pay the coupon and interest on the bonds, right? So you have an overall liability on the entire organization. So the entire organization is paying overall a big interest on the bonds, right? And then the money that you get from the bond, it is invested into 10 different projects. In that case, you can allocate the coupon, the interest that you pay on the bonds to the different projects in the same proportion based on the weightage of the capital which is spent on each projects. Some might be getting 10%, some 20%, but you can allocate the coupon and the interest rate from the bonds to the projects. But when you float the preference shares and any dividend or anything is incurred, that is not allocated to the projects like this, because ultimately they are shares, and shares have the right on the company as well. So it's a mezzanine finance. So that is an exception. So I think one of the exception is that as well. Mm, no, so IS 39 does not talks about this. But yeah, the shares or any preference dividend and the preference dividend that you pay is not considered the cost of borrowing.
Fine.
So the next terminology which is important for 23 is qualifying assets. Okay. Often it is said that qualifying asset is something that has substantial life. And there could be a question that, okay, so substantial life means what? 6 months, 1 year, 20 years? How long should the project's life to be called substantial? Okay, so we'll talk about this. I just want to highlight that it is very important definition. So qualifying asset is an asset that is subject of the capitalization of borrowing cost, a project which is long term enough, and it has a substantial period to complete. So for example, if you are manufacturing a camera and it is inventory for your day-to-day business, actually they are not part of borrowing cost or qualifying asset. Because you can say that, okay, if you are manufacturing any goods and inventory is lying in the storeroom for a month, can we apply the borrowing cost to that? Because overall organization has borrowed from bank or have issued the debenture or the bonds, so we can apply that, but it's not permitted for those unless it remains there for substantial time. So the time frame is important. Then there are some other long-term projects like manufacturing plants, power generation unit, any tall bridge which is being built. So they are part of the qualifying assets. So anything that is for the substantial time, that basically whereby you don't have to manufacture and immediately sell. So they are part of qualifying assets. Often the concept of qualifying asset is misunderstood and miscomprehended. One of the misconception is that when the project or the asset is expensive, then it is a qualifying asset. Generally, it seems like that because if the asset is considered to be long-term or substantial period, automatically it becomes expensive as well. So that's why the prevalent misconception is that the expensive projects are qualifying asset, but that is not true. It should be substantial life of the project, not the value of the project, which decides this. Also, quantum of the borrowing cost is supposedly thought that justify the entire project to become the qualifying asset. Because if the expenses are high, borrowing cost is high, then it should be part of qualifying asset. But again, IS 23 does not say that any asset can be qualifying on the basis of the expenses or the value. So the quantity is not as important, that just because the value is high, it can be qualifying asset, because these are all misconception. Plus, anything that is normally manufactured by an entity on a repetitive basis, right? So that actually brings us back to the same point, that if there are any regularly made inventory which is quickly produced and sold in the market, they are not qualified for the borrowing cost. And this highlights the point made earlier, that if any inventory is long term and it takes substantial amount of time, that can be subject to the borrowing cost, IS 23. Otherwise, such inventory is not also part of the IS 23 for borrowing cost. Are we good here? So these are some of the misconception or the myth about the borrowing of IS 23 and qualifying assets. Then IS 23 recognition. How do we recognize? So this is in a way saying that the borrowing cost should be added. It should not be expensed in the P&L. They should be added to the assets. And for the qualifying asset only. So eligibility for capitalization is given, that there are two situations, specific and general borrowing. So what happens in case of capitalization is we just debit the entire interest dedicated for that project and credit the cash. There is no P&L impact. So there are two types of borrowing. And I think we have briefly discussed the high level, that either it could be specific for the project. If a company wants to make a power plant, they can borrow from the bank or they can issue the bonds. So that is known. It is a specific borrowing. In the US especially, there are various revenue bonds issued. They are for a particular project. So the people at large will invest into that. Whatever the coupon rate is applicable for that bond, that is calculated and added to the cost of the project. So that project will have the entire coupon associated with that. So that is a specific borrowing. The general borrowing is when, suppose the organization realized that they are running out of cash because all the receivables which is with the clients are not paying because of the financial distress or economic downturn. Clients are also in the trouble and the problem, they are not paying the money, and the company has already committed to complete certain projects and they have to pay to their vendors. So what company will do? Company will just buy a big sum of money for its various operations, various projects. So say $10 billion. 5 billion is invested, 5 billion is spent on various expenses such as employee salary and up and running of the process, administration, etc. But remaining 5 billion is spent on various projects. And what are those? So 5 billion could be spent on maybe equally on 10 projects. So $500 million each projects are getting. Now, this is called general borrowing. So you borrow in general and then invest into the projects. And whatever was the cost of the coupon or the bank is charging, that will be allocated in the same proportion. So how much did we borrow? 10 billion. And we are allocating $500 million to each project. So only 5% of the total interest that we are paying to the bank or to people at large for coupon, only that 5% will be allocated to each project. So pro rata allocation of the interest is done basically for all the projects. So this is a general borrowing. Let me know if I need to explain anything numerically, but these are the methodology to apply this. Capitalization of borrowing cost commences when the entity meets all the following conditions. Of course, it has to be for the assets, because any capitalization is done for assets only. It incurs borrowing cost, because that's the entire topic. It has to be borrowing cost, and it has all the activities undertaken that is necessary to prepare the asset for its intended use or sale. So what does that mean? So it's saying that the intended use or sell it to outside encompasses more than the physical construction of the asset. So that means when you're preparing the asset, it is not just about spending money, construct it and sell it out. There has to be some value addition by the company as well. So then the borrowing cost is applicable. And any technical or administrative work prior to the commencement of the construction, basically, they are also added to the entire cost of borrowing. So that means if you have to do some marketing, if you need to do some designing or R&D before the entire setup is constructed or the software is developed, those costs are also added on the project, or it is considered the cost of actually it is part of the borrowing cost for the particular asset. So the point 3, that is important, because even if the project has not been started, but if you incur any cost which is relating to R&D, design, or any such process which is important for the project to start or work, you can capitalize that cost as well. Then there is one exception. So borrowing cost basically for incurred while the land is under development are capitalized during the period in which activities related to the development are being undertaken. So what it is saying is that if you borrow the money and that money is spent on the land or any physical site where there is no production or no development has really started. So suppose a situation that you bought the entire land to build the asset, and it was left for 6 months or 1 year without any development work, and that was maybe because of the administrative delay, any bureaucratic delay within the company, that the entire process did not start. Still, the bank will not consider that, right? The people will not consider. You have to still pay a coupon. You still have to pay the interest basically for the borrowing. So the standard says that for that 1 year, when you have not done any substantial work on the project, you cannot capitalize the cost of borrowing. So in a way, it is penalizing that if because of the any internal bureaucracy or any delay or mismanagement of the project, you borrow the money, but the project work did not start on time or and for substantial period of time, you cannot capitalize the borrowing cost for that duration. Are we clear? Let me make an example. Imagine you went to the bank and borrowed from 1st Jan 2021. How much? 10 billion. Sorry, 10 billion. Rate was 10%. So how much you have to pay? 100 million per year. So what
Hmm.
happened is, because of admin delay or bureaucracy, whatever reasons, the project did not start for entire 2021. It started from 2022 and continues until 2025. So it is essentially, so 21, 2, 3, 4, 5. So 5 years you have to pay 500 million to bank, right? What is the cost that you can capitalize for this project? How much borrowing cost can be capitalized?
600.
No, not 600.
500.
Okay, so borrowing period is what? Let's look at borrowing period first. 2021 to 2025, right? 5 years. Each year cost is 100 million. For 5 years, it's 500 million, right? The question is that does all 5 year period qualifies for the borrowing cost? That is a question I'm trying to highlight. As per the definition of IS 23, can you capitalize entire 500 million for the 5 years?
Ideally, Not sure, Nidhish, but I think so. Like, if look, whenever we plan to borrow something, we need to give something project and everything, like which is going to be start which period to which period, and the project of completions like a 5 years. Okay, so we have taken a borrowing like say any of amount what you have mentioned. So it should be charged, like it should be capitalized, like what anyhow due to
Hey,
any
Nidhish,
due to any reason if not going to be start. Yeah, Chakresh, go ahead.
N- Nidhish,
Yeah,
I'm sorry. I think I lost for a minute or so. Can you please repeat? I know you said to 2021 there's no work was performed, and then I
okay.
lost. Can you
Yeah,
please
I'll
just
quickly recap.
quickly repeat if you don't mind?
Yeah. So the project started January 2021. Okay, and the 10 billion was borrowed from the bank. The interest rate is 10%. So per year you have to pay to the bank $100 million per year. But because of the internal bureaucracy or admin lag, admin delay, the project could not be started for the entire 2021. Project started only from 2022 and completed by 2025. So 22, 23, 24, 25. That is the actual life of the project. 1 year, 2021 was complete waste. How much you are paying the interest? 100 million per year. So for 5 years, you paid $500 million. My question is, as per IS 23, how much are you supposed to capitalize out of 500 million? How much qualifies for capitalization?
Okay,
400,
then four.
400 million,
Exactly.
400 million.
Exactly. The deals with the bank could be for 4 or 5 years or so. Who knows? There could be an extension from the bank as well. Originally, the project could be financed for 4 years, but then additional 1 year bank granted when bank got the interest. But you have to only look for the period of effective period of the project, and only 400 qualifies.
So Nitish, in that case, 400 million for the first year, which is like it not started the project, so it will be the expense for the company. Like we cannot be able to capitalize
100 million, yeah,
100 million. Yeah.
correct.
Oh.
And then subsequently every year 100 million is being capitalized, so that is not expensed out.
Yeah.
The next IS 23 reduction. I have a rabbit, a leg.
They also learning for industry.
Yeah, it is very stubborn. Crazy.
So,
Anyway,
Nidhi, the same question. If I comparing the real estate industry, so nowadays means, they are taking the loan from the bank for the utilization of for the build of the building or anything, right? But they are taking times, like they are giving the proposal 5 years, but they are completing that project 8 years, 9 years, 7 years. Might be they started, they haven't started in the first year or second year. They are going to start in the third year after the any other reason. So
right.
they are following the same thing in the this situation, that capitalization means first 2 years, 3 years they are impacting the PNL, and the rest of the when the project is started, then they will start the capitalization.
Yeah, this is a perfect case for IS 23 to apply. And if they report under IFRS, they have to PNL expense out any dormant period. Only the active period will be allocated, because just even if IS 23 was not there, right? You need to sometime think this way. Even if IS 23 was not there, what is your reasonable estimate? If someone say that, okay, I have spent this much money to build this building, and I also had to borrow money, and I paid this much interest to build this entire project, right? One very simple approach should be that we should look at that what was the active period for which you worked on the project, and what was the dormant period or bureaucratic lag. Anything that was delayed purposefully or because of if inefficiency, that cannot increase the value of the project, right? When we capitalize the interest, in a way that interest is, or that money is spent on some value creation. That's why we capitalize. The underlying concept is that capitalization is done to reflect that how much value has been invested into the project. That's why the borrowing cost also reflect, because it's a cost of capital. Borrowing cost is nothing but the cost of capital. You have invested that much capital, and the cost of capital was actually added to reflect that this much expensive the entire project is, because then you can expect the useful economic life. But if there is just inefficiency or admin delay, that means no one has really got the benefit out of that capital. It is just wasted. That's why that is not added to the real estate project or any such project. It is just expensed out because it is inefficiency. So in that regard, IS 23 is just a extension of a very reasonable interpretation. What should be added, what should not be added. And I think we also had a similar concept in IAS 40 or IAS 16 as well. If something is put into the storeroom, right, and for a longer period, and there is some expense because it was stored in the storeroom for a long time, that that cost or expense is not added on the cost of inventory, right? You remember that one? Because when the stock is left for a very long period of time in the storeroom and not sold out, somewhere it reflects inefficiency, and that cost of keeping in the storeroom is not added in the value of inventory, because nothing is capitalized if it reflects the inefficiency. If you remember that, that is the rule of thumb. Many standard will be easy to grasp, that inefficiency, admin delay, bureaucracy, all this thing which results into wastage is never gets capitalized. An entity shall suspend capitalization of borrowing cost during extended period in which it suspends active development of a qualifying asset. All right. Long sentence highlighting the same thing, that capitalization of the borrowing cost is suspended for the time when there is no active development, right? So that's what we have been talking about. The activity is necessary to prepare the asset for its intended use or sell, encompass more than the physical construction of the asset, right? Okay, we have, I think, covered this. IS 23 recognition, few scenario to discuss. Okay. Should management's intention be taken into account to assess the substantial period of time to get ready for its intended use or sell? Just added a couple of scenario, basically just to bring the point home rather than just a plain statement. So the question is, suppose that you are the auditor and management's intention or interpretation for the substantial period, should that be factored? As we can see, the answer is yes, because management should assess at the time of acquisition or the start of the project whether it is ready for intended use or sell. So management's discretion is permitted here in the interpretation of the substantial period. What should be the substantial period for the capitalization of the borrowing cost? Okay, and if there are two projects together, then the qualifying asset will be will be considered on the combined basis. So suppose that there was a borrowing made for two projects together. One is the real estate building, another one is a flyover. So if the capital is borrowed for the both projects, then both the projects should be considered as a qualifying asset on a joint basis. It's like a joint account. Okay. Of course, you can apply pro rata basis all the borrowing cost as well. So in real term, practically, it does not make much difference. Ultimately, both of the projects qualify for the borrowing cost. How would you capitalize the borrowing cost? On the pro rata basis between the two projects. Can an intangible asset be a qualifying asset under IAS 23? All the assets, whether intangible or tangible, are part of the qualifying assets. In fact, in the era of digitization and the high-tech developments, the artificial intelligence and various blockchain platforms, entire world is becoming high-tech, sci-fi. So all these developments are gradually becoming more and more intangible. Some of the most expensive projects are in the world are currently intangible. So IAS 23 permits intangible uses as well. Again, suspending recognition of borrowing cost. An entity shall suspend capitalization of borrowing cost during extended period, which suspends active development of a qualifying asset. Okay. And an entity may incur borrowing cost during an extended period, but suspend the activity necessary to prepare an asset for its intended use of or sale. So again, it is saying that if there's a period of suspension for any development work, any borrowing cost is excluded. But there is one exception, that there is a seasonal delay. Maybe the laborers are not available for a particular season, or there is a monsoon when you started the project. For 2-3 months there was no progress on the project. There are certain delay which was outside the human control or the control of the company, which is quite normal for the industry. In that period, you do not suspend the recognition. Are we clear? So let's take the example. Do we remember this example, right? Of 2021. Okay. So you started actually the project on 1st January 2021. The borrowing cost was 100 million. But so when you entered 1st July, monsoon came. So from July, August, and September, 3 months, the project could not make any progress. The labor were not available. There was flooding, and it was just impossible to continue the work, right? So for 3 months of that year, you could not do anything, any work on that project, and you still paid $100 million to the bank. When you capitalized $100 million, auditors questioned this, saying that, okay, for that 3 months you have confirmed there was no progress made, so you should expense out $25 million. 1/3 of 100 million should be expensed out and should not be capitalized. Is that argument from the auditor right or wrong?
Yeah, it can be
Right.
argument.
Sorry?
Right.
One.
It's right.
Okay, so Chakresh, right. Somebody else said something?
No, it's right.
Okay, it's right. Okay. It's wrong. That argument of auditor is wrong, because for that 3 months the project could not make any progress, and still there was a charge from the bank which amounts to 25 million. It is not right to exclude, it is not right to write off that amount. That should also be capitalized, because that suspension for 3 months was beyond the human control. There was a standard for industry. This is very natural, and their factor, outside the control, and it was not because of the abnormal delay. It is a kind of part and parcel for the entire industry to become affected during monsoon, during flood, when the laborers and workers are not available, right? So it is natural, and it can happen year on year. Every year it can happen, even in 2022, 3, 4, 5. So when the suspension of the work is beyond the control of the company, and that is very natural for the entire industry, then we do not need to suspend the capitalization of that cost. Okay.
So, Nidhish, I have one example. I want to understand
Mm-hmm.
um, see, if I talk about the road industries or something, the flyover, a bridge. I read one news related to the Atal tunnel, right?
Well,
Recently,
yeah.
the PM is yeah. Recently, he Prime Minister inaugurated this tunnel, right?
Yeah.
So when I talk about that, the Atal tunnel is funded by the World Bank,
Mm-hmm.
and World Bank have given us some lump sum amount. I don't know that lump sum amount they have given to the someone, the government of India, right? And
Mm-hmm.
government of India assigned that project to some contractor or some industries to
Yeah.
build
No
the
problem.
Atal tunnel,
Okay.
right? So due to the see, the contractor and the industries also submit the one proposal, like from this date to this date we need to take the time for the creating of these articles, and they consider all the scenario. Whenever we are submitting any proposal, we consider the scenario related to the monsoon, related to the any natural things which need to be happen, like snowfall or something, the area as per the area and all, right?
Okay.
Now,
All the
now suppose,
eventuality, all the
yeah,
weather
anything,
conditions and
anything.
labor forces.
Let's suppose if I am the Srinagar, definitely I know that in the month of Jan that snowfall will be there, or something in the month of Feb something happen will be as per the local circumstances, right?
Yeah.
So based on that only the company submitted the proposal to government of India that from this date to this date we need to complete the debt at.
Okay.
Now come to the actual figures. They are taking the time. They haven't start from the same month which is already mentioned in the proposal, due to the unavailability of the labor or due to the unavailability of the machinery or something else.
Okay.
They have started after 1 year
Okay.
or 6 months. So as per this example, so whether we need to exclude the capitalization in that case. M- my concern is that whenever we are uh, creating the planning and submitting the proposal, we have to consider the all the scenario, including the natural and eventually the local circumstances, local difficulties. We know that this month we cannot be start this project.
Okay.
So why we are not the capitalization, why we are not exclude the capitalization,
We,
because this is the contractor fault. They have already considered.
no, no. The contractor has, suppose that already has considered that, going back to our project example, that in 2021 1st January we were supposed to start, right? All the agreement and terms
Yeah.
and conditions that you told about Srinagar or Jammu, etc., weather condition, manpower, supply, various other logistic issues, so that would have been enlisted in 4 or 5 different pages. Now,
Yeah, correct.
saying, despite all that, suppose there could be 2 3 different situations. So contractor has said that out of the entire 12 months, for 6 months we will not be able to work for various weather conditions and some logistic issues. Okay, so 6 months every year we will
Yes.
not be able to work. So that is kind of a disclaimer that they would have given to government of India. The second thing could be that despite the fact that they say that 6 months they can work, there could be some additional issues, right? Another 2 months they could not work. What? Why it happened? Because there was some landslide or there was a strike by the workers.
Yeah.
Okay,
Mhm.
so those situations are kind of again a little subjective. If it is because of the landslide or natural calamity, I think the borrowing cost is still would be and should be permitted, because it is saying that if it's a temporary phase, the clause saying is here, uh, cost when a temporary delay is the necessary part of the process of getting an asset ready. Okay, is this a temporary delay? Yes. landslide happened. Again, if there's a strike for 2-3 weeks, that also caused some additional delay. And there could be some other issues, maybe the outbreak of war or the firing on the border, right? So that took another 2 months. In addition to 6 months that the contractor has projected, there is some other factors for another 2 months that has stopped the work on the Atal tunnel, right? So now maybe you can argue that that additional 2 months actually should not be allowed for the borrowing cost. I would say it should be, because A, was this in the hand of the contractor? No. Was that permanent delay? No. Could there have been a way to really continue the work? No. So the project, the borrowing which was done for that project basically still has to be capitalized, because if suppose that contractor is removed, any other contractor would have been placed in that situation. Could he or she had completed the work? No, it is very similar. The landslide, the outbreak of war, the any such strike, that is completely out of the hand of the contractor. Any contract could have faced, so that should be really kind of expected cost of the borrowing again. Because even though you try to make a list of all the eventuality, it is not possible to make a complete list. There would be some interruptions anyway. So
Yeah,
there
I
could,
got your point.
yeah. So anytime if there is any very short-term suspension, temporary delay, it is safe to say that we need to add the borrowing cost. There could be a really exceptional situation when the temporary suspension is not permitted, because most of the time it should be allowed, unless the contractor or the owner itself goes into the wedding and do not come for 1.5 months. Those are a kind of very controllable incidents, and then auditor will penalize the project, saying that okay, you cannot add the cost in case something was in your hand and you just delayed that. Okay, so the next one is, there was one point here. An entity shall cease capitalization of borrowing cost. So it's saying that when to cease, when substantially all the activities necessary to prepare the qualifying asset for intended use or sale are complete. Okay, in 2 words, when to finish capitalization, when the project is completed. Next, decision tree. The purpose of decision tree is to summarize. All right, so this is entirely the decision tree or the flow of the process. So it is a quick way to assess when and how to capitalize. So in case, say, entity purchases a qualifying asset and incur the borrowing cost, if the answer is no, capitalization of borrowing cost is not applicable. If yes, then qualifying asset will fall in the scope of standard. If no, then not within the scope. So if it is no, there could be a good scenario for exam here. If the qualifying asset is not within the purview of IAS 23, the company may elect with the explanation and disclosure to capitalize the borrowing cost. Apart from that, this point is very normal flow, that if qualifying asset is part of the IAS 23, then capitalize them. If you choose to capitalize, there are 2 situations: specific borrowing and general borrowing that we have talked about earlier. Then define the date the entity ceases to capitalize, so when it will stop capitalization. Quite often, when the entire payment to the bank has been made, or that specific borrowing has been completed and paid for, that could also be the cessation of the capitalization. But it may not be very clear in case the general borrowing is done. So if the company has borrowed a massive amount on the bonds or from the bank, then you don't have a specific allocation for that project. So one needs to be very careful about defining that by May 2025, the project will complete, and then borrowing cost will not be capitalized. Otherwise, you will overestimate the cost. So these are the entire summary of 23. Some nice questions on IS 23. How shall an entity recognize borrowing costs that are directly attributable to the acquisition, construction, or production? So how do we recognize the borrowing cost? Where actually we recognize this? Equity, asset, liability, or expense?
It's a liability.
Borrowing cost?
Yeah.
One more chance.
Oh,
When we are saying where do we recognize the borrowing cost, that means we are adding the cost to the asset, inflating the asset, increasing the worth of the asset, right? So it will go under point 2. Next question is, qualifying asset is an asset that necessarily takes what substantial period? 6 months, 12 months, more than 12 months.
Substantial.
Which one?
Substantial debt.
Substantial period.
Right. A real estate company has incurred expenses for the acquisition of a permit, allowing the construction of a building. It has also acquired equipment that will be used for the construction of various buildings. Read the scenario number 3 and tell me what you think answer should be.
I think permit cost should be capitalized, and the equipment one should be on pro rata basis, I think.
Is that everyone's opinion?
I think both should be the capitalized.
First should be and second should not be. Because this equipment has been acquired for the use on ongoing basis. So we don't even have the complete list of the projects to allocate on pro rata basis. So it is just simply not capitalized. Of course, you don't even expense this out, by the way. It is still an equipment, it is still an asset, but it is not capitalized to the cost of the construction. The first one, the license, will be capitalized. The next question.
I think the same. Yes, after the ready of the network, we need to capitalize.
So what is the answer? That should borrowing cost on the acquisition of 3G license be capitalized until the network is ready for its intended use? So it's saying that until the network is ready, the borrowing cost should be capitalized or not. Is your answer yes or no?
I think yes.
yes.
Okay. All right. Good. So this is understood. So that was really the borrowing cost. You can revise this time to time using the summary here for borrowing cost. Okay. And we complete this sharply at 9 o'clock.